Hey there, it's Mike Wise with CMG Home Loans and your weekly mortgage update. Happy Valentine's Day today. I hope you have a wonderful day today. This week in the mortgage world, lots of data coming out. GDP, CPI, PCE, all inflation numbers coming out. Jobs reports. At the end of the day, a lot retail sales came out today. So a lot of things going on today or this week. And let me dive into the details and let you know how it affected mortgage rates. So what we saw at the beginning of the week, we saw the jobs report, BLS jobs report, 143,000 jobs added, which was below the street expectations. But at the end of the day, the unemployment rate declined from 4.1% down to 4%. Now, that is a good thing for the economy, but let me just tell you that historically, that kind of rise in the unemployment rate means that a recession is coming or already here. Obviously here, we're not in a recession. In fact, the GDP numbers came out and they were very strong. And so that was, the economy is still doing strong. But I do think that we are at a tipping point. There's a lot of things that are telling me that. Rents, they're falling. So this is a big deal. I'm going to show you this in just a minute. But the national rents are down, very modest, 0.1%. But many cities like Austin and Tampa, Florida, down 16%, down 8%. So those are things that are impacting, that are not showing in the numbers yet. With all of this data, Jerome Powell came out earlier in the week, basically said they're in no hurry to lower the Fed funds rate because they are not down to that 2% long-term goal of the inflation. They still remains elevated in the market here. So they're not in a hurry. So we do not need to be in a hurry to adjust our stance. We know that reducing policy restraint too fast or too much could hinder process on inflation. So they're still worried about that inflation number and having it go down. I think that there's a little bit behind the scenes that you should look at and see. CPI came out the next couple of days there, and basically it went the wrong direction. Interest rates went up, but at the end of the day, shelter cost, it was a big piece of that number there. So you can see right in here, this is the consumer price index. You can see that overall the inflation is coming down, but they're trying to get down to this level here. So let's mark that level, right? Get rid of this data here. And so they're trying to get down to this 2% level. It's started to come down, but it's jumped back up a little bit here. And so that is what the Fed is worried about. Mortgage rates, they went up. They went back up above the 7.1% level. And that's because of those inflation numbers. So as far as the shelter cost, it is a big weighting in the consumer price index, 44%. And I've talked to you guys about this before, but it's a long lag. And what I just told you was cities like Austin and Tampa, the rents, they're coming down, right? And they're coming down at a faster pace. Those numbers are not reflected in the CPI numbers. It's a long lag, and so there's a lot of concern that it's a number that is incorrect, and that we are actually getting closer. Even though eggs this week, oil, gas, they all went up as far as the inflation numbers for January. So those were all things that had an impact, right? So with all of those things said, right now with the Fed, you see their probability of lowering the Fed funds rate in their March, May, and June meeting at 97%, 90%, 66% of not moving at all. I think that you might see that change here over in the next little bit here. So overall, mortgage rates, they jumped over 7% this week, up just a tad over. A year ago, they were at 6.96%. So not a lot of movement in the market at this point in time. Retail sales came out today. This helped mortgage rates. So retail sales, They slumped 0.9% in January. I think that this is a post-Christmas, like, hey, we spent our money in Christmas and now we got to dial it back a little bit. But it was way off of their numbers. They were thinking it was going to be a 0.7% gain, and it was a down 0.9%. So a big miss on that. And the market, the treasuries, actually rallied on that, and the interest rates started to come down this morning a little bit. So why is that the retail sales coming down? Well, the total debt balance, we're over $18 trillion now. And you can see this is the non-housing debt. It just keeps on going up, and it's got to stop at some point in time. The delinquencies are starting to get higher, and I think the consumer is starting to back off a little bit. It is shown by the retail sales here, but the total debt balance is just, it keeps on going up. We cannot sustain this, and I think there's going to be a tipping point here where the consumer really starts to slow down pretty quickly here on that. So as a result, well, let's look at the jobs. Jobs numbers came out. Jobless claims declined last week. That was not a huge deal. You have the layoffs and the federal workers. That's going to have a big impact on the jobs numbers as well. And let's see here, nothing else that I wanted to talk about here. But basically the jobs, they were kind of muted. It was not a big deal. So at the end of the day, mortgage rates this morning, 7.04% on that. This is down a little bit from the yesterday and the day before. Let me show you the market there on these. So if you look at this is the Treasury market. These are the prices. Remember, green on Treasury prices means that that's good. And so this is the last 5 days, 1, 2, 3, 4, 5, right in here. You can see that it was a very volatile time. This is when the inflation numbers came out here. The prices went down and the yield went up. I'll show you that in just a second. At the end of the day, when we come back, the rates, they pretty much stayed the same from last week, and not a huge change overall from last week. The yield on the 10-year Treasury, you can see that it went up right here. This is Monday, Tuesday, Wednesday, Thursday, Friday. So red here is good. That means the interest rates are going down. So they went up here. The yield got all the way up to 465-ish. That was not good timing there. And then all of a sudden it's down back to let's see here, the 445, which is a good sign here. So overall, at the end of the day, mortgage rates, they're starting to get better now. But we have a lot of things that the Fed is looking at and trying to understand where they're going to go with the rates. The tariffs are a big deal. And, I personally think that the tariffs is a big negotiating tactic. I think a lot of people are putting a lot of weight on the possibility of a lot of tariffs going into play. And yes, there are going to be tariffs. But it is more so a negotiation tactic to get back to a level playing field. I think that that's not going to have as big of an impact on inflation as a lot of people think. So anyways, that is the update for this week. I hope you have a great weekend. I will be around all weekend. Shoot me a text, send an email, give me a call, whatever you need to. I will be available to answer any questions that you might have. We will see you next week. Have a great weekend.